A very, very good morning to all of you. This is live coaching classes for CA Intermediate, and I am CA Bhatia. Today is our class on the final head of income, which is income from other sources. Before we proceed, there were two things which we discussed yesterday. One is that for the first 10 minutes, I'll be taking your necessary doubts which you have over the last few classes. Keeping in mind the restriction, we'll take it for the first 10 minutes. Any doubt which I think needs to be addressed for the public as whole, we'll pick those, and I'll try sharing the maximum queries, or I'll try answering the maximum queries. Along with that, please do not hesitate first to answer any question. No question is a bad question or a good question. Also, before we proceed to income from other sources, there was one thing which was left, was the tax rates and capital gain, which we'll do before we start our final head of income. So let's begin with our queries. If you have, if you have any query, please drop it now so that it can be entertained. Okay, so Parth asks, can you clarify the nature of asset when whether it's short term or long term in case of section 54B? So Parth, if you will go through our section 54B, it's written the land should be used for the agriculture purposes by assessee or his parents or HUF for 2 years immediately preceding the date of transfer, right? So when they're saying the land should be used for at least 2 years immediately preceding the date of transfer, now suppose assessee is using it, or if his parents is using it, assessee would get it by a gift in that period of holding of 2 years included, or if HUF is using and assessee gets it in partition, then also period of holding of HUF is included. That means 2 years ke liye to kahin na kahin se the assessee has the period of holding, right? And also it is to be used for the agriculture purpose. That means when we're talking about land, it automatically becomes 24 months, and hence it would be a long-term capital asset. So it is not very directly mentioned, because earlier land and building पे भी 36 months का timeline था. That's why they're not mentioned it very specifically. If we would talk about that time, then both short-term and long-term would have been included. Mansi, irrevocable trust, you will automatically understand when you will be doing clubbing of income. Okay, salary chapter is complicated. Please suggest something. See, salary, my students, what you can do is, first, always while doing it, kahin se bhi do not consider yourself as employer, consider yourself as employee. And think about all the benefits, all the monetary terms, allowances, everything which you are receiving. You can break your salary calculation into three parts. One would be a salary, another would be your allowances, third would be your perquisites, and obviously fourth part would be the retirement benefits. So once how you will remember it, allowances ka make a chart, simple. Taxable allowances, partially taxable allowances, there is HRA, and then there is as per section 10. Section 10 there are two, depending upon expenditure, depending upon limit. That's it. Otherwise, all are taxable, exempt for remember it. Perquisite में please do RFA, please do car, please do interest and loan and medical facilities are very simple. And others are other perquisites, especially transfer of assets and use of assets. They are also very important. ये क्या total क्या salary would come, but yes, it will not come in a day. You have to be regular with it. Salary का definition for each type of exemption is different, and RFA is different, and for PF is different. So usko please write it one place, salary for the purpose of this, salary for the purpose of this. In fact, in your module in revision, where the revision recapitulate part is there, they have given you that also. Vrinda, 44AD, if I have to explain it in one short, 44AD is a presumptive income. Instead of calculating PGBP ka total income by adding disallowances, giving the benefits of deductions, admissible deductions. We calculate it on direct flat rate of 6% on 10 or 8% of the turnover. So the turnover which is realized in any mode other than cash, basically, or any mode other than bearer check, would be at 6%. The turnover which is not realized till the date of filing of return or realized in cash would be at 8%. No other deductions are allowed. Yes, but 4480 once you take, you have to take it in that year plus 5 consecutive years. If you do not take it, so then in the year in which you do not take it, and the next 5 years may also you cannot take it. In the year which you do not claim it, and the next 5 years, if your income is crossing basic exemption limit, you need to maintain books of accounts and you need to get your accounts audited. See, I think there's a general thing of there's a lot which is happening is overwhelming. You people, which is very natural at your stage because you are doing all these things in the first go. So, understanding them, relating them is what you need to focus on. So once, if you're doing it and if you do it after 10 days, again, if you revise it, you yourself would see the difference in your understanding. So do not worry, just solve it step by step. Kaise yaad hoga, that is another thing. First, try to understand it. Once you understand it, kaise yaad hoga would obviously come by default. Okay. 45.3, 45.4 is you will be taking up at which are for partnership and firms. Rekha, that would be taken up when you are doing your final level. Okay, 45.1b, Subbu, this is a new section which is included where a new capital asset altogether, which is your unit-linked insurance plans, ULIPs are included. So for them, first of all, they have been included in your capital asset, but only those on which the premium during the year is more than 2,50,000 or those in which the premium aggregating in total is crossing 2,50,000. Okay, it's crossing 2,50,000. Now they have said that the capital gain of that would also be taxed. Now since it's a capital asset, the capital gain of it would also be taxed. What would be the capital gain? Capital gain would be the difference which you have paid, the difference which you have received on maturity minus the difference of premiums which you have paid throughout the life of that policy. So if you have paid 1 lakh each for 3 years, not 1 lakh, say 2 lakhs, 3 lakhs each for 3 years, that is 9 lakhs, and you have received 10 lakhs on maturity, then 1 lakh is your gain. Very interesting question, Siddhant. The difference between slump sale and demerger. Now, slump sale makes student you are just transferring an undertaking altogether. A part of you which is being transferred. Demerger happens when it's a proper policy integrated as per approved government standards. When altogether, when you're transferring you are dividing it, a new entity is born altogether, and that entity is now would be working independently. So that is demerger. Demerger would always be as per the policies and as per those conditions which we discussed. Slump sale is just like selling a part of. Okay, whether it is mandatory to write note, Hariharan, yes, very, very mandatory. In fact, for everyone, if you need to score good marks in your, in not only in DT, in accounts also, in indirect tax also, strict your answer to the point of what the questions ask. If the question asks, give us the tax, then give us the tax amount. If the question asks, give us the income amount, give them the income amount only. If the question asks, give them the taxable amount, give them the taxable amount. If the question asks, give them the exempt amount, then just give them the exempt amount. The point is the checker should not be seeing where the answer is. It should be clearly visible to him. Apart from that, anything which is there to solve that question should be your working notes. Should be your working notes. If even if you have to tell, if you're making a PGBP a comprehensive question, you're solving it. So why you are allowing it, why you are disallowing it, what all those working should be supported by notes, and that note should come as working notes. All the sections under which you are doing it or not. Pooja Daryam, I am not sure about the batch 5 thing right now. Ilama, I've already asked the tech team to see why the recordings are not available. I think we'll solve it soon. So while solving employees' contribution and RPF exceeds 7.5 lakh, then application will apply. Yes, that you have to check, and that 12% wala part also you have to check. Both you have to check. Exactly like Pooja, just like module solves the question, exactly like that you have to present in your in the exam paper. If you need to score full marks, see, we do the question right and still we do not get the marks is just because of those things. Sometimes we get exemption and not because of those things. Siddharth, yes, it is charged, but again, this is not how it is charged, when tax is charged, that is as per your 115 JB. That is not there at your level. Thank you so much. So as I've been informed, the lectures are available on website and YouTube. Please go through them as per the schedule wise, you'll find them. Okay, so with this, our quick rapid fire questions are solved. I hope I took, if just in case I missed something, we can have it later if we have the time at the end of the class. Okay. Now, please, students, on the screen, everyone, before we begin income from other sources in Nepal, I wish to take one thing, which is the rates. The rates of taxation, because when we talk about tax rates on capital gain, there are special rates. There are special rates. That means the tax rate which you have seen for individual, HUF, AOP, BOIs, companies, firms, that is not applicable. These long-term and short-term gains are taxed at a special rate. First is short-term gain. Other than gain which is in triple 1A. That is included in your income and it's taxed as per slab rates. That means it's just like any other income and it is taxed at slab rates. Okay, clear? So if you have short-term capital gain, say from immovable property, then you will add it in your total income and normally you calculate as per slab rate. Now, there are three typical sections in which other gains are taxed. One is triple 1A, which is for short-term capital gain arising from equity shares, listed equity shares, equity-oriented mutual funds, units of business trust, and now also included your ULIPs. Your ULIPs which are tagged as a capital asset. But unit of business trust is something which you will understand when you're into the final levels. I'll not touch that. So on that, there's a special rate of 15%. Then there is a long-term capital gain on the same assets discussed, equity shares of a company, units of business trust, equity-oriented fund, and ULIPs, where the tax rate is 10% with some benefit of 1 lakh. Here the conditions are STT should be paid on transfer. Here the condition is STT should be paid on purchase and transfer for equity shares and STT paid on transfer for other things. And then there is one general section of long-term capital gain where the gains in general are taxed at 20%. Yes, there are provisos or exceptions to it, but these are what our rates are when we talk about capital gain. If you think there is any other rate applicable, no. But now let's understand how the rate is applicable for each particular gain, except the one which is included in your total income and tax at slab rate. So now let's start with short-term capital gain at under section 11A. The short-term capital gain under section 11A, as told, is applicable on these four types of gain. On these four types of gain: equity share in a company, unit of business trust, units of equity-oriented funds, and the odd part or the ULIPs, which are now taxed as capital asset. Okay, so on that, the concessional rate is there, special rate is there, which is 15%. Flat 15% pay, you will tax your capital gain. So if I say, but here, as told, the condition is that the STT should be paid on transfer. So if I say my salary income is 5 lakhs after taking standard deduction, and my short-term capital gain under section 11A is 4 lakhs. So my total rate would be 5 lakhs tax as the slab rate, which would come to 12,500. 4 lakh tax at 15%, which would come to 60,000. Total 72,500 plus my cess of 4%. This would come to 75,400. Okay. One thing, student, remember is that you will not get the benefit of deductions from this special rate income. The income tax says that we have already charged you a special rate. We will not give you any deduction which will come under chapter 6A ka benefit to calculate this special rate. Ma'am, example, yes. We'll take that. So if my salary income is 5 lakhs, and my STCG is 4 lakh, and then there is deduction of under chapter 6A, say of 2 lakhs. Then 2 lakh I will not reduce it from here. Very important point comes is usage of unexhausted basic exemption limit. Unexhausted basic exemption limit. Ma'am, what is that? Whenever there is an STCG of special rate or LTCG of special rate, there is a concept called unexhausted basic exemption limit can be adjusted. So they say that if you have salary income, please here यहाँ पे confusion होता है, please everyone on the screen, salary income of 2 lakhs, STCG of 11A of 4 lakhs, STCG of 11A of 4 lakhs, and let us take, you have chapter 6A ka deduction also of 1,50,000. Now, how will you calculate tax on this? How will you calculate tax on this is what is the question. What I told you is that chapter 6A ka deduction, you cannot take it from 4 lakh, right? So, abhi we're not touching this. If I reduce this chapter 6A ka deduction from my salary income, my net taxable income other than STCG would be 50,000, right? A 50,000 pe you will say, ma'am, basic exemption limit se kam hai, no tax would be applied, which is correct. Which is correct. So I will not apply tax on this salary income. But listen here carefully. A basic exemption limit is of what? Of 2,50,000. My income excluding STCG is of how much? After deduction is 50,000. My basic exemption limit is of 2,50,000. This is my basic exemption limit, right? My income, ignoring the STCG, is 50,000. So my unexhausted basic exemption limit left is what? Unexhausted means unused. Basic exemption limit is 2 lakhs. 2 lakh, agar mera income or hota, then also I would have not paid tax. If my income would have been more than 2 lakhs, then also I would have not paid tax because it would have been within the basic exemption limit. Agreed? Yes. So this 2 lakhs, which is unexhausted, can be adjusted with the special rate wala capital gain. If this 2 lakhs, which is unexhausted, can be adjusted with the special rate wala taxable gain, and this then my income on which I will calculate tax would be 2 lakh, because 4 lakh में से 2 lakh गया, 4 lakh में से 2 lakhs unexhausted basic exemption limit का part गया. So 2 lakh को I'll tax at 15%, that would be 30,000. Plus cess would become my total tax. I'll explain again. Unexhausted basic exemption limit. First, let's read it, the theory part, and then we'll do it. And this is only applicable for resident individuals and HUF, not for resident AOPBOI, not for non-residents. Okay, so in the case of resident individuals or HUF, if the basic exemption limit is not fully exhausted by any other income, which is in our case was salary, then such short-term capital gain will be reduced by the unexhausted basic exemption limit, and only the balance would be taxed at 15%. Only the balance would be taxed at 15%. However, the benefit of availing the exemption, basic exemption limit, is not available in case of non-resident. So here what happened? Our unexhausted basic exemption limit was 2 lakhs. Our STCG was 4 lakhs. So 4 lakhs, may say first I reduced that 2 lakh, and then I taxed whatever the amount is coming at 15%. Again, students, I'll repeat, my income is not reducing. My total income would be shown as 2 plus 4, 6, 6 minus 150 as 450. Only for the purpose of tax calculation is what you are making the adjustment. Paper may, exam may, do not reduce your gross total income from so an amount. No. Only when you're doing tax calculation and working notes, tax calculations may you will make such impact. You will make such impact. Okay. Clear? So 4 lakhs may say unexhausted basic exemption को I reduced it, and my impact came of 2 lakhs, and उसपे I made it 15%. Any query? Inderpal not 3,50,000, 2 lakh would be tax. Now, what is the section 112A to be do away? किसी को कोई query? Perfect. First, we have to deduct this exemption from all other incomes, and any exemption is left, only that part will be used for LTCG and STCG. Mansi says. Okay, so if I say it again, first you have to make your deductions come back from your income. This is your gross total income. Gross total income is 6 lakhs. Deduction is 1,50,000. My net total income ka first I have to come to that point. So my gross total जो भी income except the special rate में से I will reduce the deduction. So excluding the special rate wala income, which is this, I am reducing the deduction. So my net taxable income prima facie is coming 2 lakhs minus 150, which has to be taxed as per slab rate is 50,000. 50,000 to slab rate apply hota hai? No. So this 50,000 pay, there would be no tax. That is clear. But now I have to see how much is my unexhausted basic exemption limit. How much is my unexhausted basic exemption limit? Because my total basic exemption limit is 2,50,000. So 2 lakhs is still unexhausted. 2 lakh is still unexhausted. That means if I had income as per slab rates of more than 2 lakhs, then also I would have not paid any tax. So 2 lakhs is unexhausted basic exemption limit. That unexhausted basic exemption limit, I would reduce it from my STCG, and then on whatever the amount is left, on that I will tax 15%. Again and again I'm saying you will not reduce it from your STCG in the total income computation. Only when you're computing tax, you have to make such adjustment. Total income में से मत 2 lakhs reduce करके STCG taxable 2 lakhs दिखा दोगे. No. This is only for the purpose of tax calculation. Clear? Similarly, there is another taxable section, another section on which special rate is applicable, which is 112. Section 112 is on long-term capital gain, other than which is there on 112A. We'll come to that. Tax on long-term capital gain. So in general, whatever your taxes are on long-term capital gain, that would be taxed at a special rate of 20%. Special rate of 20%. Just like that, in 111A, we had special rate of 15%, but on namely three types of transfer, three types of capital assets. Here you have, in general, long-term capital gain ka rate at 20%. These are called, students, special rates or concessional rates. Why? Because suppose if you're having an income at a higher slab rate of 30%, then also these income would be taxed at a concessional rate of 20%. Or if you're a company or a firm where you are paying 25% or 30% as the tax, then also your capital gain would be taxed at 20%. Clear? Here also resident individuals and HUF. Resident individuals and HUF get the same benefit of unexhausted basic exemption limit. We'll do few questions, do not worry. Same. Agar unexhausted basic exemption limit is there, you will reduce it from LTCG and of 112, and then you will pay tax at 20%. Clear? There are certain exceptions, but this is only for individuals HUF, not for resident AOPBI, not for non-residents. Okay? There are certain exceptions to the rate of 112, where few long-term capital gains are taxed at some special rate. First of all, when I talk about non-residents, only in case of non-resident or foreign companies, the tax rate would be 10% for long-term capital gain arising from unlisted securities and shares of private company or closely held company pay. There would be a flat rate of 10% without any indexation benefit. No indexation benefit. That means cost, sale price or full value of consideration minus cost direct. No indexation benefit for non-resident. For non-resident. Clear? For other assessees, this is only for non-resident. For other resident assessees, like company, domestic company or non-residents also, there is a choice, as in an option, that whether they can go for 10% without indexation or they can go for 20% with indexation. For what type of asset? I'll tell. They can make a choice. That means when they will make a choice, this may be tax lower aa raha hoga. Right? This may be tax would be lower. 10% without indexation or 20% with indexation for listed securities other than units. like listed preference shares हुआ, other than units, and zero coupon bonds. Then in that case, and this is all of the nature of LTCG, then in that case, they have a choice either to go for 10% without indexation or 20% with indexation. This may be obviously the tax rate is low, but do not worry, for your level, typical question would be of just 20%. These would not come. Very honestly, these would not come until and unless the paper is of a very difficult level. These generally would not come. So can I say for resident, units and unlisted shares would be taxed at 20% with indexation always. But for non-resident unlisted shares and securities will be taxed at 10% always without indexation, right? And for listed securities other than units and zero coupon bonds would be taxed at either 20% without indexation or 20% with indexation. But what you have to remember is the flat rate of 20% along with unexhausted basic exemption limit for resident individuals in nature. This you can give a look to, that would be more than sufficient. Namrata, which assets? All the long-term capital gain are covered here except 112A under section 112. Shreya, I'll do one more question, you will understand it, don't worry. Abhi, let me explain 112A. We'll do few more practical questions to make you understand. 112 is just same like 111A. Only difference here is that यहाँ पे the tax rate is of 20%. Short-term capital gain tax rate is your 15% on those three capital assets. These are some exceptions which you can give a look to, where non-resident ka unlisted shares would be taxed always at 10% without indexation benefits. Listed securities बहुत कम होगा, listed preference shares like that, and zero coupon bonds में resident के पास there are options whether to go for 10% without indexation or 20% with indexation. Next is 1112A. Now remember 1112A का cost of acquisition discuss करते time we had a grandfathering mechanism. जहाँ पे 31st January 2018 तक we were taking fair market value. First we were comparing it with the actual consideration. Whichever was lower, then we compared it with the cost. Whichever was higher, that was our cost of acquisition. I hope so you remember that. How to tax the capital gain arising from that? Short-term capital gain arising from those assets goes to 11A. Long-term capital gain arising from those assets, namely equity share of a company, where on sale and purchase, both the time STT is paid, equity-oriented funds, business trust, units of business trust, and unit-linked insurance plans. Unit of business trust and equity-oriented funds paid, the STT is paid at the time of transfer. Then you would be taxed at a special rate which is there under section 112A. 112A at a rate of 10% on capital gain exceeding 1 lakh. Capital gain exceeding 1 lakh. Here also you will not get deduction under chapter 6A ka benefit would not be there. Secondly, unexhausted basic exemption limit ka benefit would be there. Unexhausted basic exemption limit ka benefit would be there. But ma'am, how do we calculate the tax on this particular type of income? Suppose students, your capital gain, there is no other income, and you only have long-term capital gain from 111A in, as 5 lakhs. Okay, and you had deduction also 1,50,000. Gross total income you will for 5 lakhs, but this 1,50,000 will not be adjusted from your long-term capital gain because deduction under Chapter 6 is not allowed. It is not allowed under 111A, under 112 or under 112A. Okay, so 5 lakh would be my income for the year. Here, but how will we calculate tax on it? Tax under section 111, tax under section 112A would be calculated at my income is 5 lakh, but the tax is at 10% on the capital gain exceeding 1 lakh. That means 10% would be charged on a capital gain exceeding 1 lakh, which is 4 lakhs in this case. So 4 lakh pay, I'll charge 10%. Hence, my income tax on such long-term capital gain would be 40,000 plus cess of 4% would be 40,000. My income is not reducing by 1 lakh. My long-term capital gain would be 5 lakh only. It would not be 4 lakh. But again, for the tax purpose, since the rate specified here is 10% on capital gain exceeding 1 lakh. So 10% on capital gain exceeding 1 lakh means 10% on capital gain exceeding 1 lakh, which is here is 4 lakh. So 4 lakh pay, 10% would be applied, and hence the tax would be 40,000. Clear? Now let's take more example by including other incomes in it. Here also basic exemption limit of concept is here. Let's assume my salary income is 3 lakhs. 112A, या 112A का capital gain which is there is 4 lakhs. Deductions under Chapter 6A is 1 lakh. Now let's try calculating the tax on it. First of all, 3 lakhs में से 1 lakh adjust हो गया. My income left is 2 lakh, जिस पे I will not apply any tax because below than basic exemption limit. How much is the unexhausted basic exemption limit? My unexhausted basic exemption limit is 50,000. 2 lakhs is my income. 2,50,000 is my basic exemption limit. 50,000 is my unexhausted basic exemption limit. This comes as 3,50,000. Correct? Up 3,50,000 pe I have to apply section 112A. 112A says 10% on capital gain exceeding 1 lakh. 10% on capital gain exceeding 1 lakh here would be 10% on 2,50,000. Hence it would be 25,000. Plus 4%. So 4%. This is 26,000. Again, first I reduced unexhausted basic exemption limit. Capital gain left for tax purposes 3,50,000. 3,50,000 में से I reduced 1 lakh because 10% is charged on exceeding the 1 lakh limit. 2,50,000 I applied the tax that came as 25,000 plus 1,000 plus 4% का cess. Total 26,000. Let's take another example. Salary income is 6 lakhs. Do it along with me, then you will have a better understanding. 112A का cap gain is 4 lakh. Total 10. Deduction under Chapter 6A is 1 lakh. Compute the tax on it. Compute the tax on it. Tax would be 6 minus 1, 5 lakh pay, slab rate. which would come to 1 lakh. Sorry, which would come to 12,500. Okay. And on this 4 lakh, अब कुछ basic exemption limit का exhaustion is not there. 4 lakhs पे 10% exceeding 1 lakh, so 3 lakh पे 10%, which would be 30,000. Total 42,500 plus 4% says, which would come as 1,700. Total 44,200. Clear? Now you will say, ma'am, what if we have all three types of capital gain? All three types of capital gain. Then how will we make adjustment for basic exemption limit, unexhausted basic exemption limit? We have three types of capital gain. How will we make adjustment for that? तीनों टाइप का इनकम हो रहा है एक साल में. How will we make an adjustment for that? Very simple. Again, let's assume there is no other income and there are three types of gain in a year: 111A, 112A and 112. ठीक है. 111A में मेरा income is 2 lakh. 112A में my income is 1,50,000 and 112 में my income is 1,80,000. ठीक है. Now, what is my unexhausted basic exemption limit? Completely, we have 2,50,000 available with us. Correct? Okay. Now, how will you adjust it? How will you adjust it? Proportionately? No. Tell me the rates which are applicable. The rates which are applicable at 111A is 15%. This is 10%. The highest is 20%, right? So first I will wish to reduce my highest slab wala income. First I will highest slab wala keh rahi hu, highest tax rate wala income. I have unexhausted basic exemption limit as 2,50,000, totally unexhausted. So first I would want to reduce 20% message so that I do not have to pay any tax. Correct. So 20% में से first I'll reduce 1,80,000. So पूरा का पूरा exhausted limit यहाँ पे consume करते हुए पूरा का पूरा long term capital gain of 112 gets finished. ठीक है. Then also I'm left with 70,000 का unexhausted basic exemption limit still. How 2,50,000 में से 180 मैंने 112 में use कर लिया, right? Still 70,000 is there which is left to be used. Correct? Which I use now with 111A. Now why? Because again, the next highest rate is 15%. Two lakh 50 में से first I consume full 180. 180 when I reduced, still I have left with 70,000 का basic exemption limit, which now I'm using with this 2 lakh. So now we have left with 130. So 130 को I will tax at total करके you will get the tax amount. Quick query, please look into it. Students, I believe you may be having different types of things, like why we cannot take this, why we cannot take this, or what if this is so much, this is that much. What I suggest you is, there are various income tax calculator available online, especially from the income tax website. Take whatever amount of income you want to take, compute it, then match your answer with it. You will get the right answer. Pooja, why Pura 1,80,000 tax to exceed on 1 lakh has to use only 180,000? No. Triple on under section 112, there's a flat rate of 20%. But under section 112A, there is also flat rate of 10%, but only on capital gain exceeding 1 lakh. So, जो मेरा unexhausted basic exemption limit है, obviously first I'll adjust with the higher tax rate. Hence, पूरा 2,50,000 में से 180 completely I exhausted here. Now remaining is 70,000. Where should I remaining unexhausted basic exemption limit after adjusting even with the long-term capital gain of 112? Still I have 70,000 to adjust. That I'll adjust it from here. So 130. Now my unexhausted basic exemption limit is completely exhausted after consuming it from short-term capital gain of 111A. 130 पे then I paid the tax at 15%, and if I have not adjusted any unexhausted basic exemption limit, I'm not left with anything. So 150 पे I have to now calculate the tax, and by default 112A का tax is 10% exceeding 1 lakh. So 50,000 पे 10% I've calculated. In no situation my incomes are reducing, only the calculation of tax is getting mattered. Okay. Subho, because again 1 lakh exceeding 1 lakh. Jay, each chapter, each head of income is equally important to you. Business में से you get a complete 14 marker or a 15 marker, जिसमें थोड़ा सा part would be of capital gain or maybe of other sources. So capital gain, salary, business income, very important. House property का you get a 5 marker का question to 7 marker का question. Also, then there's adjusted in the exhaustive questions. Other sources, again 4 to 5 markers, still you get a question from it. Because obviously first I will go to the higher rates to adjust. Now you have to pay tax. First you will reduce the income which are at higher rates, not at the lower rates. Okay. Again, बहुत सारा permutation combinations which might be coming in your mind. Ma'am, please take this and then solve it. Match your answer with the calculators which are available online. You will definitely get the right answer. After the class, take as many examples as you want to, and you will definitely get the correct answer. I have not reduced 50,000 in 112A. Baba, 112A ka tax rate is 10% exceeding 1 lakh. So even if I have 112A ka income at 10 lakh, I will pay tax on the tax payable would be 90,000, which would be coming at 9 lakh. It is by default ki tax rate is 10% exceeding 1 lakh. 10% on income exceeding 1 lakh. Okay, so with this, our capital gain is pura. Please try to solve the questions, especially for the tax rate. Work as much, take as many combinations. एक दूसरे को, give it to your friend. Ask your friend to give me, give yourself some combination. Do the calculation, match it from the calculator there. Now we proceed to our main part of the class, which is income from other sources. Income from other sources. Students, income from other sources is what? Income from other sources is income from other sources is what? Any income which do not form under any particular head, under any other particular head would be coming under this particular head. Income from other sources may you'll have all the types of income which you can imagine, which is not going under salary, not going under house property, not going under PGBP, basically not coming from business or profession, not going under capital gain, basically not from a capital asset defined, or not coming from an employer-employee relationship, or not coming from the ownership of the house property, would come here. We have discussed already lots of type of income which comes here, but typically we'll be talking about tax, the provisions which are there in relation to dividend income, gifts. Then we'll be talking about dividend income, gifts, your what else? We'll discuss the list of other incomes which are covered here. Your especially for closely held company where the FM shares are issued at a premium. All those particular situations, all those particular details would be discussed in. All those particular provisions would be discussed in details. Okay, so give yourself a moment and we'll proceed. Give yourself a moment to come out of capital gain and we'll proceed. इनकम टैक्स का वेबसाइट है, वहां पे जाओ, टैक्स कैलकुलेटर वुड बी देयर, टूल्स में, टैक्स टूल्स में. Income from other sources. First, very common income which falls under income from other sources is dividend income. Dividend income from units or shares. ठीक है, डिबेंचर से तो डिविडेंड इनकम नहीं आता, करेक्ट? So from units like mutual funds give you your dividend income, then your shares give you dividend income, preference shares give you dividend income. That is called dividend income. Back in 2 years ago, such dividend income was not taxable in general in the hands of assessee. It was not taxable in the hands of assessee because companies declaring such dividend used to pay additional tax on such dividend on behalf of the assessees, and again, long story short, it was not taxable in the hands of assessee. But now, all types of dividend income is taxable in the hands of assessees, whether it is coming from your domestic companies or foreign companies. Whether I've invested in Apple and Apple is declaring dividend, that is taxable in my hand. Whether I've invested in Tata Consulting Services and they are giving me dividend, that is also taxable in my hand as a shareholder. Dividend in general means when the company has profits and they decide to distribute it. The idea is the company will never distribute profits when they are into losses. The company would never declare dividend when they are into losses. Company would declare dividend only and only when they are into profit. So they have some accumulated profits and then they decide to distribute it. Declaring dividend is not important, that every year you have to declare dividend. That is company's policy. What we are understanding is we are the person who are receiving that dividend and hence it would be taxable when it is received. Clear? Chalo. Khatam hua? No. But there are certain types of deemed provisions or deeming provisions in dividend that where even if you're seeing that prima facie, it is not a dividend which is declared in the general meeting and then distributed to the shareholder, but still some types of transactions are happening between the shareholder and the company, which we assume that even if they're not prima facie looking as dividend, but they are dividend. But they are, as per income tax, termed as dividend. Again, dividend, I just told you, agar company declare karte, okay, 10 per share, we will give you the dividend. That is dividend which is getting credited in your account. That is one thing. Or even if a dividend gets converted into units, dividend reinvested into and got new units, that is also dividend received. But here I'm talking about where you are actually not receiving dividend, which appears to be a dividend, but there are certain transactions between the shareholder and the company, which the company says that this is dividend. Okay. What are they? First, we have deeming provisions of dividend under section 2 clause 22 from section A, subclause A to subclause E. First of all, let's understand section 222A. Two 22A. 222A says that this distribution of accumulated profits entailing the release of company's assets. Any distribution to the shareholders, which in turn is releasing my assets as in company's assets, would be termed as dividend to the extent of accumulated profits. Why to the extent of accumulated profits? क्योंकि accumulated profits अगर होगा तभी we talk that there is dividend, right? So if anything is over and above accumulated profit, that would not be dividend. If anything distributed over and above accumulated profit, that would not be dividend. Example, I have accumulated profits of 10 lakhs and I have distributed, I have given assets to my shareholder of 15 lakhs. So 10 lakh would be considered as dividend, 5 lakh would not be considered as dividend because dividend is the part which is coming from accumulated profits. Also, those accumulated profits are capitalized or not, that means whether they are in the form of capital reserve or in general reserves, that does not matter. That does not matter. Accumulated profits are there. Usme se jitna amount you are paying to the shareholders would be termed as dividend. When first is 222A, where there is any release of assets. A say releasing of assets. Company giving assets, any assets, suppose anything in kind to shareholders would be called deemed dividend to the extent there is accumulated profits. Balance sheet mein accumulated profit is of 10 lakhs. Company has distributed assets of 7 lakhs to shareholders. That means 7 lakhs is deemed dividend. Or as simple as company has 10 lakhs accumulated profit, they have given in cash 7 lakhs to each person. That is also releasing of assets. Cash is also an asset, right? That is also deemed dividend under section 222A. Clear? So releasing of assets or distributing of assets to the assessees or distribution in kind to the shareholders would be deemed dividend and hence would be taxed in the hands of shareholder. Jay, I will come to your question. Very good part. Company pay dividend after paying tax from the profit. Company pay dividend, so why we pay tax again on the same? Very interesting question. Surely company is paying tax on the profits, but again, dividend can come from your capital profits, which might not be taxed, from your any reserves which are there, from your specific reserves, from your general reserve, which might be offered to tax. But again, that is not considerably a transferring of income, but it's a distribution of income. That's why it is taxed in the hands of shareholders. But yeah, when you talk about share of profits, which we are taking up for partnership firms or income of HUF given to individuals, that is not taxed. That is not taxed in the hands of partners or individuals, saying that on those profits already company has paid the tax. That is just giving their share on it. But when we talk about shareholders, dividend concept is included because that can come from any part of your profit which might be there on tax or not. Okay. This is clause A. Next is clause B, which is 222B, which says B for bonus shares. Two 22B. B for bonus shares. They say that any distribution of bonus shares to preference shareholders, bonus shares to preference shareholders, bonus shares to preference shareholders, or distribution in the form of debentures, deposit certificates, to debentures, deposit certificates to any equity shareholder or to any shareholder would be termed as dividend, in the hands of such. But one thing you have to conclude it from here is that bonus shares to equity shareholder would not be deemed dividend, but bonus shares to preference shareholders would be deemed dividend. Why? See, bonus shares to equity shareholder होगा तो क्या होगा? Bonus shares to equity shareholders, if it is there, what would happen is, see, bonus shares to preference shareholders and debentures or deposit certificates issued to shareholders would be dividend to the extent of accumulated profits, whether capitalized or not. But bonus shares to equity shareholders would not be deemed dividend. Why? See, I am an equity shareholder. More bonus shares are issued to me. Capital has not increased. What would be the impact? My EPS would go down, right? My EPS would go down. Earlier, there was 100 rupees earning per share on, suppose 50 shares I had. 100 rupees earning per share, but now due to bonus shares received, now there are 60 shares, but still there is 100 into 50, say 5,000 per 50, so 100 per share मेरा EPS आ रहा था. But now there is still 5,000 का earning, but it is now for 60 per share. So my earning per share has reduced. It is nowhere a bonus shares are nowhere serving me a profit or sort of dividend. Bonus shares nowhere for an equity shareholder serving a sort of dividend, because ultimately because of bonus shares their EPS would reduce, right? But here for preference shareholders where they already have a fixed dividend, issuing of bonus shares would be termed as dividend to them, Similarly, issuing of deposit certificates or debentures to equity shareholders or preference shareholders would also be termed as dividend. Because आप entry क्या करोगे? You will make your general reserve account debit to debentures, right? So and narration में लिखोगे debentures issued to shareholders, because you have not received any cash. What you have done is you have just utilize your reserves, utilize your accumulated profits. So this debentures or bonus shares which are issued to shareholders, bonus shares of preference shareholders and debentures to any shareholder would be termed as your deemed dividend. Next important is section 222C. C means closure of companies. Any distribution to the shareholders on closure, that is on liquidation, to the extent of accumulated profits, would be termed as deemed dividend. So if I have accumulated profits of 5 lakhs, and I have made the distribution on liquidation, whether in cash or in kind, to 4 lakh rupees, then this 4 lakh would be deemed dividend in the hands of shareholder. Any distribution on liquidation to the shareholders to the extent of accumulated profits would be called as deemed dividend. But यहाँ पे students, now we have to understand the concept of section 46, which I kept in capital gain wala chapter specifically. So thoda sa dividends we are going aside. Anything distributed on liquidation to the extent of accumulated profits to the shareholder is deemed dividend, right? So this example here, accumulated profit was for 5 lakhs. I have distributed 4 lakhs, so 4 lakh would be deemed dividend. Now, what if accumulated profits were 5 lakhs, but I have distributed to the shareholders 8 lakhs? 8 lakhs. Now what will happen? Liquidation hua, everything has to be closed off, everything has to be wound up, books have to be cleared now. So 8 lakhs I have distributed to the shareholders. 8 lakhs I have distributed to the shareholders. Now what will happen? First of all, to the extent of accumulated profits would be treated as dividend. That means 5 lakh would be treated as dividend. 5 lakh would be treated as dividend. Accumulated profits is the date of liquidation you have to pick. Okay. Now what about ma'am dividend? ये तो you think yourself as shareholder. So 5 lakh को तो आपने dividend की तरह treat कर लिया, right? What about the 3 lakh? What about the remaining 3 lakh? Can I say now, since the company has gone into liquidation, can I say now your shares are no more there because now the company has wound up? So shares का क्या होगा? You are a shareholder. Think yourself as a shareholder. Okay. So can I say that now the company is no more there? The company is no more there. Your asset, which is share, is extinguished now, right? Asset which is shares of that company is extinguished now. Yes. Extinguishment of asset transfers amounts to transfer as per the definition of transfer. Correct. So that means when there is a transfer and shares are capital asset, that means can I say this 3 lakh is my full value of consideration for the transfer of shares which is now being of the company which is now being liquidated? So can I say this full this 3 lakh is my full value of consideration? Yes. So on the remaining part, I will apply capital gain. On the remaining part means that on the part which is in excess of cumulated profit, I will apply capital gain, and the excess part would be considered as my full value of consideration, and then I will reduce cost of acquisition of those shares from it, and I will get my capital gain or capital loss. So this is what section 40 on liquidation, any distribution of assets by companies in liquidation. First of all, it is not a transfer in the hands of company. Nothing would be taxed in the hands of company. Secondly, for the shareholder, whatever is receiving to the extent of accumulated profits would first be my dividend. Anything over and excess of accumulated profits, whether in cash or in kind, would be full value of consideration for those shares. On that, I will calculate capital gain. Cost of acquisition kya loge? The cost at which you had acquired those shares. Period of holding kya hoga? Period from which you were allotted those shares to the date of liquidation. And based on that, you will take it as long term and short term. Clear? This part is clear. 222C along with section 46. Any query? Capitalized or not means not only capital reserves, you can use your general reserve also. All of them would be included in your accumulated profits. Correct Chaitanya, correct Namita, किसी को कोई doubt? Yes, Vrinda, debentures to both would be considered as dividend. Again, 222C is important for you. Then dividend income is not under section 112. Capital gain income only goes under section 112. Dividend income is taxed as per slab rates. जहां पे भी there would be special rate, that I will tell you. So distribution of accumulated profits entailing the release of company asset, 222A clear. 222B, distribution of debentures, deposit certificate to shareholders, and bonus shares to preference shareholders, again to the extent of accumulated profits, clear. Distribution on liquidation also clear, correct? Now we come to distribution on reduction of capital. 10 per share ko now you have made it as 8 per share. The face value of the share you have reduced. The nominal value of the shares you have reduced. So when you are reducing that share value, you must be giving that 2 rupees back to the shareholder, right? That distribution or reduction of capital amounts to dividend. That distribution amounts to dividend. So any distribution to its shareholder by a company on reduction of its capital, to the extent to which the company possesses accumulated profits, whether such accumulated profits are being capitalized or not, would be deemed a dividend. Again, students, in all those things, you have seen one thing is to the extent of accumulated profits, to the extent of accumulated profits, because dividend in its essence is coming from the profits. Anything except that, ka alag treatment hoga, we have to see case by case, but everything to the extent of accumulated profits would only be deemed dividend. Clear? Next, we move to a very important deemed dividend, which is 222E. A company, they started finding loopholes. They said, okay, we cannot give assets, fine, because agar we'll give assets, dividend would come there. If we reduce, if we give them any bonus shares, debentures, dividend again would come there. So what companies started doing was they started giving loans. So first of all, 222E is deemed dividend when an advance or loan is given to shareholders. But this is only applicable when the company we are talking about is a closely held company. Closely held company is a company in which publics are not substantially interested. Closely held companies are what company? Company in which public is not substantially interested. That is called a closely held company. Clear? That means in general a private company. You can say in general a private company, there's a whole definition of company in which public are substantially interested, or you can say openly held company. Those who are not covered in that list as a closely held company. Okay? But for now, you can understand a private company to understand this provision. 222E talks about advances or loan given to shareholders. So they say if there's a company, it gives loan to shareholder or give loan to any person on behalf of shareholder, or gives loan to any concern in which such shareholder has substantial interest. Then, to the extent of accumulated profit, these loans would be termed as dividend in the hands of shareholder. Ma'am did not understand, obviously. So let's understand that we are talking about a company called ABC Private Limited. John is a shareholder. First of all, this cannot be any specific shareholder. We're talking about shareholders which have at least 10%, or more voting power. That means they are in a position to impact, 10% or more voting power. So John has 12% shares of the company in ABC Private Limited. John has 12% shares. So any loan which is given by company to John, that loan would be considered as deemed dividend to the extent of accumulated profits, because they say instead of giving it in any form, they try to give it as loan. They try to give it as loan just to exclude from the liability. So government ने कहा okay, हम income tax में loan भी include कर देते in the deemed dividend form. So if ABC Limited is giving any loan to John, to the extent of accumulated profits, whether capitalized or not, would be deemed dividend in the hands of John. Ma'am, agar loan repay kar diya, then also yes, then also this would be treated as deemed dividend. Ma'am, if the loan is for with interest and he's paying interest, then also it would be deemed dividend. Until and unless company ka main course of business is giving a ordinary course of business is providing loans. They are into the business of providing loans. Until and unless that is the situation, otherwise all the cases would be considered as deemed dividend. Any loan given to John having or any shareholder having 10% or more voting power. Okay? So John ko na dekhe, if the company gives loan to Mrs. John, or Mrs. John se better, let's call her Miss Juliet. So Mrs. Juliet, who the company is giving, any person on behalf of the shareholder, the loan amount. John को नहीं दिया, किसको दिया? Mrs. Juliet को. This loan also in that case would be deemed dividend in the hands of John again, because shareholder कौन है? John, right? The shareholder is John. Juliet is no one. Juliet is no one for the company, but only the company said that give the loan to Juliet on behalf of me. Then also that would be covered. That would be covered, and that would be deemed dividend to the extent of accumulated profits in the hand of John. अब क्या हुआ? Instead of any person behalf पे नहीं, John was a partner in a company called JJJ Associates. In a firm called JJJ Associates, John and Juliet Associates. Okay. So instead of giving the loan to John or to Juliet, ABC company had lent the loan to this JJJ Associates, or which here means any concern in which the shareholder has substantial interest. When I talk about substantial interest, that means either 20% of the voting power, 20% or more of the voting power, or more than 20% of the P, or 20% or more the profit sharing ratio. Okay. So suppose JJ Associates में John and Juliet both had 50% shareholding. So instead of giving the loan to John or Juliet, ABC lent a loan to a concern, which is this, in which the shareholder, which is John, had substantial interest, which is more than 20% or more than that of the shareholding profit shareholding. Okay? Then also this loan would be treated as deemed dividend in the hands of John. Then also this loan would be treated as deemed dividend in the hands of John. So giving a loan to the shareholder who has 10% or more voting power, giving a loan to any person on behalf of shareholder, giving a loan to any concern in which that 10% wala shareholder has substantial interest, and substantial interest means 20% or more, then in all the situations, such loan would be treated as deemed dividend in the hands of shareholder. Exception is that you are money lending is your ordinary course of business, then in that case it will not be treated as deemed dividend. Also, if there is a circular which came that trade advances if you are giving, that would not be treated as deemed dividend. Ma'am, what is trade advances? मैंने John को money दिया to get some. He is my trader also, he is my shareholder also, and he is my regular debtor creditor also, my party with whom I do the trading. So if any advance is given for any supply, that would not be considered as deemed dividend. Okay? Achha, last exception, any subsequent dividend paid by the company is not taxable as dividend to the extent to which it is set off by the company against any loan or payment that has been earlier treated as dividend within the meaning of subclause E. नहीं समझ आया? Now, what has happened? Company ने John को loan दिया. Company gave loan to John for rupees 4 lakh. Okay, now this 4 lakh is treated as deemed dividend. Now what happened? Company had accumulated profits of 20 lakhs. Now later company declared dividend. Properly they declared the dividend of 40 lakhs. Company के पास बहुत accumulated profits है, say 50 lakhs of profit. ठीक है, of 40 lakhs का company declared it. John was 12% shareholder. He would have logically got how much? 4,80,000, right? उसका share. 40 lakh का dividend declare किया. John was a 12% shareholder, remember? So उसका share is coming to 4,80,000. Now what will happen is, obviously, company would pay John only 80,000. Only 80,000 because 4 lakh to already loan की तरह they have given to him. So situation in which the company set off the loan amount with the dividend to be declared. The company set off the loan amount with the dividend which is declared. Then in that case, only the excess part would be taxable. Why? Because Baba, 480 में से 4 lakh पे तो already has been considered as deemed dividend. 480 में से 4 lakh already has been considered as deemed dividend, right? So only 80,000 in this situation would be considered as dividend because company is only paying him 80,000. Had the company been paying him 4,80,000 in addition, then pura ka pura 480 would have been considered as dividend in his hand. But now company is paying to his credit only 80,000. To his credit only 80,000 because वो कह रहे कि 4 lakh is already given as loan. Only 80,000 we are paying, so obviously only 80,000 would be taxed as dividend, not complete 480. But if the company is giving pura, then pura would be taxed as dividend. This is what it is written. Now let's understand it. Any subsequent dividend paid by the company, that is 4,80,000, is not taxable as dividend to the extent to which it is set off by the company against any loan or payment that has been earlier treated as dividend. That is 4 lakh in this case. However, if the dividend paid is not set off against earlier deemed dividend, then in the absence of set off, such dividend would be taxable. Agar 480 is not set off and pura ka pura 480 is given to John, then full 480 would be taxed as dividend. Clear? Mrs. Juliet may not be related to John or not, but the loan is given on behalf of Mr. John, then that would come. Rohini, I did not get your question. Okay, Ria, see, here, when we talk about shareholder, to trigger 222E, shareholder, there should be closely held company and the shareholder should have 10% or more of the voting power. This is what is the shareholder holding which matters on applying 222E. Now when we are talking about a concern in which that 10% wala shareholder has interest, that interest should be substantial interest. That interest should be substantial interest. When we are talking about the shareholder kab trigger hoga? When uska holding is 10% or more. But we are talking about the concern in which such shareholder has substantial interest is what we have to see. And substantial interest ka matlab is 20% or more of the voting power or 20% or more of the profit sharing ratio. Say example में, let's take JJ Associates के अलावा, let's take another private limited company, JPQ. Here J had substantial shareholding. Here John had a substantial shareholding of 25%. So if ABC Limited gives JPQ Private Limited any loan, that would also be considered as loan in the deemed dividend in the hands of John. But suppose ABC Private Limited Company is giving loan to Element Private Limited Company, where John who has 10% holding, holds only 5% equity share, then any loan given to Element Private Limited would not be considered as deemed dividend in the hands of John. Why? Because here John ka substantial interest is not there. Okay? Got it, Ria? Dividend is never declared to a person on behalf of shareholder. We are talking about Rohit, we are talking about the loan given on behalf of shareholder. Somesh, DDT is not there now for 1150 provisions are not applicable. 1150 is withdrawn for the shareholders from last year. Also, any distribution of shares pursuant to the merger never comes to the provisions of dividend. Any payment made on buyback never comes to the provision of dividend. Okay, buyback, if in detail is required, we will discuss. But Abhi, just remember these exceptions. Clear? So now we'll take a quick break. After break, we start with our other incomes which are assessed under the income from other sources, income from other sources, and then we'll discuss gifts, which is very, very important. Then we'll see, depending on the time, what other topics could be picked up. Okay, so let's take a quick break of 5 to 10 minutes. Please, please go hydrate yourself, eat something, and come back. Okay, so welcome back after the break. Now let's see few queries. Okay, it's not timing, sir. Deemed dividend is like normal dividend would be taxed as per the normal rates. Just is that we are including this in the definition of dividend, apart from what you think a general dividend is. Yes, in Nepal, 20% of the voting power, when we're talking about a concern which is a company, 20% or more of the voting power, or 20% of the profit sharing ratio when we're talking about the concern which are other than company which do not have that voting power or a concern. Okay. Now we come to let's understand very quickly what other types of these incomes are covered under your income from the your income under the head other sources. Okay, casual incomes, winning from lotteries, crossword puzzles, all of these. You go to KBC, you won 1,000 rupees, 10,000 rupees. You go to KBC, you won 7 crore rupees. All of that would be covered under income from other sources because obviously it is not being covered in any other head. Gambling, betting. Income from casinos, all of these would be here, taxed here. Race including horse races. Now horse races क्या होता है? Horse races if you've seen in movies, a good very planned तरीके से you maintain horses, you go into horse races, you put your bet on certain horse. If you win, that is income from horse races. Okay? Any sum received by an employer from his employee as contribution towards PF, ESI, superannuation fund, if the same is not deposited in relevant fund and it is not taxable under the head PGBP. Basically, they are trying to say that very typically this will happen. Employee contribution, remember, is an income until and unless you deposit it within the due date. Deduction in chapter 636, subsection 1, clause 4A, if I'm not mistaken, or 5A. If you remember that, ये बस वही कह रहा है कि अगर if it is not part of PGBP, then it would be part of other sources. If it is not taxable in the PGBP, it would be taxed under other sources. Interest on securities. If you are until and unless you're into the business of securities, interest of that would be taxed in other sources. If you're into business of securities, interest on securities would be your PGBP income. But if you're not into business of securities, I've invested in some debentures. On that, if I'm receiving any interest, that would be my income from other sources. Income from machinery, plant or furniture. I am not into a business of letting machinery and plant or furniture, but I have let out or I have given some plant, machinery or furniture on rent. Then that would be income from other sources. But if I'm into business of letting out furniture, then whatever amount I get would be the part of PGBP income. Composite rental income. Remember composite rental income where the rent amount along with the assets amount is inseparable, and it is not taxed in PGBP, then it would come into income from other sources. Amount received from keyman insurance policy. Keyman insurance policy क्या होता है? The policy which is there for a keyman, right? So if that policy has been done by your employer and as an employee you're receiving keyman insurance policy amount, that is your salary income, profit in your salary. Then if in a firm, one partner ka there is keyman insurance policy and then you're receiving any income from it on any maturity from it, then as a partner you're receiving it, that would be your PGBP income. But otherwise, if someone has done your keyman insurance policy who is not your employer or not in a PGBP nature and you're receiving any sum, that would go in your other sources. Next is section 5627D, important also and simple also. Very simple section. First of all, this section is only applicable when we talk about closely held company. When we talk about closely held company. So only for closely held company this section is applicable. This section will be applicable. We are talking about consideration received in excess of FMV of shares. क्या होता है? Private companies, closely held company issue shares. Okay, issue shares. 100 का face value है. If they issue the shares at premium, This 20 they take it into securities premium account, right? Securities premium account में 20 they take, and the security premium they are not paying any tax because it's a capital receipt. Okay, correct? Understood? Think yourself as a company here. 100 a share you issued at 120. The 20 you take it as premium and you transfer it to securities premium account. Correct? But this provision comes into picture when you are issuing a share at premium, but at also in over and above fair market value. By fair market value of that share was only going around was 110. The fair market value of that share was going around was 110. So they say, how are you able to issue a share at a price more than fair market value? Okay, we understand you're issuing shares at premium, but how are you issuing shares at a price more than fair market value? There's something fishy. Because if you're able to issue a share at a price more than fair market value, then that excess part we will consider it as income. We will consider it as income. So they say fair market value, issue price, and fair market value pay, any difference if is there would be considered as income from other sources for the company who has issued the share, but provided the shares are issued at premium. If the shares are issued at discount, then this section would not be applicable. So consideration received in excess of FMV of shares, if the shares are issued at premium, then there would be income as per section 56 subsection 2 clause 7b, which talks about the excess to be treated as income from other sources for the closely held company. So if you take an example here, on the screen, please, everyone. Issue face value था 100, FMV था 120, issue price was 130. So 10 per share, which is 1 lakh, would be income for the company as per 56(2)(b, because FMV say above, if you're selling any issuing any shares, that would be your income as other sources. Then face value was 100, FMV was 120. Issue price is 110. आपने premium पे issue किया, not a problem. That's okay. It is within fair market value. No income would be there, as per section 56(2)(7)(b). Next, issue price is 100. Fair market value is 90. Sorry, face value is 100. Fair market value is 90. Fair market value is 90. Issue price is 98. Now there's a difference between issue price and 90. Correct? Issue price is more than fair market value. But since the shares are not issued at premium, section 56(2)(7)(b would not be attracted. Section 56(2)(7)(b would not be attracted. Now this is interesting one. Face value is 100. Fair market value is 90. Issue price of the share is 110. Issue price of the share is 110. Shares are issued at premium. First, number one, 56(2)(7)(b is triggered. Shares are issued at more than fair market value. Correct. So both the conditions are there. So 20 per share, which is 40,000 shares pe, 8 lakh would be treated as income in the hands of the private limited. Clear? इसका exception है that if you're receiving the funds from venture capital or undertaking from venture capital or venture capital financing, if you're receiving, this provision would not be applicable. Next, income which is taxed under your income from other sources is interest received on compensation or enhanced compensation. Compulsory acquisition may you get, remember compulsory acquisition may you get compensation. That compensation को मिलने में it takes time. Compulsory acquisition आपका happens in some year, compensation is received some year, and then there is enhanced compensation. So on these compensation, government pays interest. On these compensation, government pays interest. That interest is a part of other sources income. What did I say? The compensation pay, if any interest which you're receiving, that would be the part of other sources income. I'm not talking about compensation. Compensation is full value of consideration for calculating the PGBP, for calculating the capital gain. But the interest which is received on compensation will go in other sources, and would be taxed on receipt basis. Advance forfeited due to failure of negotiation is something which we discussed, 56.9. Advance forfeited before 1st April 2014 would be reduced from the cost of acquisition. Advance received after 1st April 2014, advance received and forfeited after 1st April 2014 would be taxed as other sources. What other income students can come here, like interest on security, interest on income tax refund. Income tax refund आपको मिलता है, उसका interest would come in income from other sources. Director का sitting fees would come here. So there can be many incomes which, even if not discussed here, but can be part of income from other sources. Remember, subletting of the house. If you let the house because you are the owner, that will go in your income from house property. But if the tenant sublets the house to another person, that will go from income from other sources. So all of that are what comes here. Next, very important, please mark this section as very important, section 56 to 10. For the next 15-20 minutes is what we will be discussing, section 56 to 10, which is very, very, very important. Okay, let's read the heading first. Taxation of sum of money or property received without consideration or without advocate consideration, section 56(10). Achha, students, gift, if I talk about gift, whether in cash or in kind, received from employer is salary, right? Is salary income. Gift received by virtue of business is PGBP income. Perquisite or gift? Section 28 में. So suppose one of my trader supplier gave me an iPhone as gift. That would go as my PGBP income. I met some targets and I gave him some discounted price, so he gave me an iPhone in return. That is a PGBP income. Okay. We are talking about other than salary and PGBP income, if any sum is received, think yourself as recipient. First of all, you are the person who is receiving the gift. Any sum is received or any property, whether immovable or movable, is received without consideration or without adequate consideration. Without consideration means I have not paid anything. You are the recipient, you just received it, you did not pay anything. Without adequate consideration means that you did not pay what was the actual price. You got an asset of property of 4 lakh rupees, but you only paid 1 lakh rupees for that. Then also that would trigger the taxability as gift in your hand. This is covered under section 56 to 10. Section 56, subsection 2, clause 10. Now let's first generally understand what are all covered here. First of all, this is applicable only on the capital assets of the recipient. If you are receiving any asset which would ultimately become your stock in trade, raw material or consumable stores, then this would not be taxed here under section 56 to 10. Suppose you were into a business of mobile phones. You're into business of mobile phone and I gave you mobile phone as gift. That is a stock in trade. That would not be taken as gift. That would not be considered as gift. If you are a builder and I have given you a flat as gift, that would not be a gift for you. A real estate agent, that would not be a gift for you under section 56 to 10. Only these specified properties which you can see here, 9 plus 1, 9 of these and 1 immovable property, only those are covered under section 56 to 10. Share securities, jewelry, archaeological collections, drawing, painting, sculptures, any other work of art, bullion, being the capital asset of this SC, and immovable property like land or building or both. Only these are the one which are covered under section 56 to 10. So if I'm talking about car received, a car received as gift would not be covered under 56 to 10. A mobile phone received would not be covered under section 56 to 10 because it is not coming in these list of property, the property, movable properties and immovable properties. Remember, these are all personal effect wale items which we saw. Plus, there is only shares and securities which is added here. So only these properties, if received by you, would be considered as taxable gift if received for inadequate consideration or without consideration. Immovable property or these specified movable properties. Mobile phone mila nahi hoga, bike mila nahi, because that is not covered here. Clear? Laptop mila as gift, not taxable, because again that is not covered under the definition of movable property. Then also, first before going on the taxability, let's discuss where all these section is not applicable. Where this section is not applicable. First of all, if you're receiving any sum of money or the property, whether for inadequate consideration or for no consideration from relatives. Relatives say if you're receiving anything, students, relatives say if you're receiving anything would not be taxed as gift, would not be taxed as gift. The question you will come immediately with is, ma'am, what is relative? What is relative? Who are relatives? Whether the one which we discussed in salary, those are relatives? No. So here relatives ka definition is quite extensive, where we are covered with first of all, individual के लिए, if I'm talking about individual, उसका spouse would be relative, ठीक है? Then is individual के brother and sisters. Brother and sisters and their spouse would also be relative. Brother and sister and their spouse. So first, so इनके spouse would also be relative. This is individual. Individual का spouse would be relative. Then brother and sister of individual and their spouse would also be relative. So if you have a sister, then your brother-in-law, which you say Jijaji, or if you have a brother, then your sister-in-law, which you say Bhabi, would also be relative. Similarly, brother and sister of spouse, brother and sister of spouse would also come here. So similarly, brother and sister of spouse would also come here. Then parents of the individual, parents of the individual and unka brother and sister. Parents of individual and unke brother and sister. Parents of individual and their brother and sister. And here also spouse of the brother and sister of this spouse of the individual. So spouse ke brother and sisters and brother and sisters ke spouses. Okay? Then parents ke brother and sisters and their spouses also. And their spouses also. So spouse of your mama, spouse of your mama, spouse of your bua, or both of them would also be included. Parents ke brother and sisters and brothers and sisters ke spouse. Okay? Then any lenient ascendant or descendant, any lenient ascendant or descendant of the individual. So children, grandparents, children, grandchildren, all of them would be included. Plus, obviously, their spouses would also be included. Any lenient ascendant means papa, papa ke papa, papa ke papa ke papa, or beta, beta ka beta, beta ke beta ka beta. All of them are my lenient ascendant, aane wala, and descendant means who are gone, and their spouses. Similarly, lenient ascendants and descendants of the spouses. Linear ascendants are the spouse of the individual would also be included. Linear ascendants and descendants of the spouse of the individual would also be included. So this is what the relative definition is. And when we talk about HUF, any member is the relative. So HUF receiving anything from its member is HUF receiving it from its relatives. Clear हुआ? Individual के case में who are the spouses? So anything received from the spouses would be, anything received from the relatives would not be an income, would not be an income under section 56 to 10. Clear? Received by HUF from its members, not an income. Received on occasion of marriage of the individual. Relatives se to mil raha hai, not an income, right? Anything which you are receiving on marriage, on your marriage. By marriage, we mean function of the marriage, not wedding anniversaries or anything. If you're receiving any gift on your marriage from any of your friend, from anyone going on, also what all suggans which you receive on marriage or any gifts, crockery sets and all those gifts which you received on marriage is not included as gift. Is not included as gift. So anything received on wedding anniversaries or birthdays are included as gift if not received from a relative. So if I've received a birthday gift from my bua, that would not be a taxable gift because it is from relatives. So first of all, you have to see in a gift wala question, first you have to see is whether it is a property covered or not, or a money. Secondly, then you have to see from whom I am receiving it. Whether I'm receiving it from relative or not. If I'm not receiving from relative, what was the occasion when I received that gift? If it was marriage, then also it would not be a gift. Anything which you received under will, or by way of inheritance would not be a gift. Received in contemplation of the death of the donor, kuch kisi ka death pe you are receiving. Receiving anything from local authority would not be a gift. Received anything from educational institution, funds, universities, hospital, associations or trusts mentioned under section 1023C. Anything received from a trust or institution registered under section 12AA. Anything received on a transaction not regarded as transfer under section 47. 6B, 60, 747, 1 is also included. Like the transaction which we discussed yesterday, which were not termed as transfer. If they are not termed as transfer, they will not be treated as taxable gift in the hands of the recipient also. Just like partition pay. Suppose partition pay members को HUF से सब कुछ मिल रहा है. Partition pay HUF का property is distributed to members, so that is not treated as gift because that is covered under section 47(1), which is not written here, but that is covered here. One was that you are receiving anything from education institutions, hospital, medical institutions, etc. But also if these people receive anything, that is if the fund or the trust or the universities or the medical institutions or the hospitals are receiving anything, if they are the recipient also, then also nothing would be taxable under section 56 to 10. This is about the applicability and the non-applicability. Now let's discuss about the taxability. Now let's discuss about the taxability. Okay? Taxability is very important, students. Very, very, very important. Please, everyone on the screen. Abhi tak koi doubt? Sushil, now linear descendants clear? Bullions are khazanas. Okay, chalo. Now let's proceed further. Acha, key man insurance policy when it is in income from other sources is when you are receiving that amount in the key man insurance policy and that policy was not taken by your employer. मतलब employer ने premium नहीं दिया, because अगर employer ने premium, if the employer has paid the premium, then that would be your salary income. You are the key man, maturity pay, you have received the something, and then that would be your salary income. Or business ne premium nahi diya, as in the firm has not paid the premium, then that would be your, if the firm has paid the premium, then that would be your PGBP income. So if other than the firm or the employer, if someone else is getting your key man insurance policy and you are receiving the sum out of it, that would be your income from other sources. Priya says marriage items should be gift, then why also more or less everything is included, then what is included in gift? Baba, we'll see what is included in gift. Wedding anniversaries, if you're receiving anything from non-relatives, is it gift? We'll see that, okay? Now we'll discuss about the taxability. First of all, the section, the heading was any sum of money or property. Property mein there are two divisions. Movable property and immovable property. Movable property and immovable property. Movable property mein again there are two divisions, without consideration and without advocate consideration. Immovable property mein without consideration and without advocate consideration. Sabse pehle let's discuss the easier part, sum of money received as gift. Kya hi samajh aayega? Okay. Sum of money received as gift. You are the recipient, I'm saying again and again and again. If you receive any money in an year, the aggregate of which exceeds 50,000. If the aggregate value exceeds 50,000, then the whole value of the money would be taxed as gift. Where the aggregate exceeds 50k, then the whole amount would be taxed as gift. Now suppose it was your birthday. Or suppose it was wedding anniversary, whichever you want to suppose. Your father gave you 11,000 ka cash. Your mother gave you, or mother-in-law gave you 21,000 ka cash. Your friends gave you 30,000 ka cash. Friend A, then some far relative, not covered under the relative definition. Some your cousin gave you, chacha ke bete ne gave you 14,000 ka cash. Okay, this is what you received from as money on anniversary or on birthday. First of all, this would not be considered. Why? Because this is from relative. This would also not be considered. Why? Because this is from relative. Now I have left with friends se 30k ka mila, far relative se 14,000 ka mila, who is not into the definition of relative. Okay, cousin se I received 14,000 and 30,000 from this. Total is 44,000. Total is 44,000. Nothing would be taxed as gift. Nothing would be taxed as gift. But suppose friend se mila 30k, cousin A se mila 14k, and cousin B also said, okay, I'll also give you. Cousin B se I received 10K. Now कितना total cash seed gift हो गया मेरे को? 30 plus 54,000. Now, since the aggregate cash received during the year exceeds, aggregate money received during the year exceeds 50,000, then the whole 50,000 would be taxable as gift. The whole 50,000 would be taxable as gift. It may be received on separate occasions, it may be received on separate dates, it may be received from separate person. If in aggregate it crosses 50,000, everything would be taxable. Everything would be taxable. Ma'am, friend ने ही 50K दे दिया and cousin ने 14K दिया and दूसरे cousin ने 10K दिया, then obviously everything would go taxable. The aggregate received during the year, if crosses 50,000, then the entire amount would become taxable. The entire aggregate amount would become taxable. Clear? Chalo. Next is movable property. Movable property is different, simple. First I'll do movable, then I'll do non-movable. Movable property. Let's discuss jewelry. Jewelry मिला मुझे from my cousin. ठीक है? From my cousin, I did not pay anything. So, Mr. A is my cousin. You are the recipient. You received jewelry, which was for a value of 4 lakhs. Full amount would be taxable. But if it's a value of 10,000, say I only got a small ring, which was for 10,000. For no consideration, then nothing would be taxable. Meaning thereby, here also, if movable property, which is received without consideration, any movable property received without consideration, the aggregate market value of which is less than 50,000, then nothing would be taxable. But if the aggregate fair market value of that is more than 50,000, then entire amount would be taxable. Again, simple. Agar fair market value of the assets which are received without consideration, fair market value of the movable property received without consideration is not crossing 50,000, then nothing would be taxable. If the fair market value in aggregate, in all the various movable properties which I have received, in aggregate, if crosses 50,000, then the entire amount would be taxable. Clear? Sure. Next part. Something received without inadequate consideration or without adequate consideration or for inadequate consideration. Any word is right. Inadequate consideration likha ho or without adequate consideration likha ho, both are the same thing. So if I receive any movable property, I'm assuming it is from non-relatives, and the fair market value and consideration ka difference. So the fair market value and consideration ka difference, if it is more than 50,000, then the entire amount, the difference part is the gift amount, that would be taxable. So suppose fair market value of shares were 30,000. I paid only 15,000. Jewelry was for 40,000. I paid 10,000. कितना हो गया यहाँ पे difference? 15,000 हुआ. Inadequate consideration. Here inadequate consideration is how much? 30,000. It is within 50,000, nothing would be taxable. Now let's add another asset which I received. I received painting. Fair market value था उसका 50,000. EV कितना हो गया 30,000. Now the difference is more than 50,000. So this 75,000 would be my taxable movable property received without adequate consideration. This would not be the taxable gift. Consideration would not be the taxable gift. Jitna obviously benefit the gift which I received is the difference. That would be my taxable gift. That would be my taxable gift. Next, एक करते हैं, फिर we'll do the question for it, ठीक है? Next is for immovable property. Immovable property थोड़ा ध्यान से समझना students, थोड़ा सा people get confused in that. Immovable property received without consideration is simple. If I have received without consideration an immovable property, immovable property में the term which we use is not fair market value, the term which we use is stamp duty value, ठीक है? So if any immovable property is received without consideration and the stamp duty value of such property exceeds 50,000 in aggregate, then that would be my taxable gift. So if I have received a plot of land, the stamp duty value of which was 5 lakhs, so 5 lakhs pura would be my taxable gift as a recipient. Obviously, if it is received from a friend, not from a relative. Okay? So 5 lakh pura ka pura would be my taxable gift. If I received a movable property of, say, just a small piece of land in some rural area where the stamp duty value of that area was only 10,000, nothing would be taxable. Nothing would be taxable. We are not talking about land as an agricultural land or a rural agricultural land. No. Any land or building or both, everything would be covered here. So the stamp duty value exceeds 50,000, full amount would be taxable. Simple, without consideration, easy. But what about without adequate consideration? That is thoda sa difficult. Let's understand that. Without adequate consideration. Any amount received without adequate consideration or any property, immovable property received without adequate consideration. Usme bhi first thing, obviously, you will compare that if the difference between the stamp duty value and the consideration, the stamp duty value and the consideration exceeds 50,000 in aggregate. First of all, stamp duty value and consideration ka 50,000 ka difference, and also at the same time, my consideration or stamp duty value should be more than 110% of the consideration. Something similar, 110% of the consideration strike hua, 43C and 50C, but that is for the person who was transferring. Here is the person who was receiving it. Listen, stamp duty value first should be more than 110% of the consideration, because then only gift would be triggered. Because remember, 10% is just a relaxing amount. 10% is just a relaxing amount. Also, stamp duty value and consideration ka difference should be more than 50,000. Then only the gift would be taxable under this particular head. That means, suppose if my stamp duty value is 5 lakhs, or say if my actual consideration is 5 lakhs, and my stamp duty value, or let's take it a bigger one. If my actual consideration is 10 lakhs, stamp duty value is 10,50,000 or 10,60,000. You will say, ma'am, 50,000 से ज़्यादा का difference है, we will tax it. No, first you have to see whether it is within that 10% limit or not. Since 10 lakh का 10% would be 1 lakh, so 11 lakh तक का stamp duty value is allowed, which in this situation is the case, which is in this case is the situation. Hence, nothing would be taxable as gift, even if the difference between the stamp duty value and actual consideration is exceeding 50%, but since it is within 110% of that consideration, there would be no gift. There would be no gift. Another example, stamp duty value was, consideration was 8 lakh. Stamp duty value was 9 lakh. Whether it would be a gift scenario or not, 8 lakh ka 110% is 8,18,000. My stamp duty value is crossing that limit, and also the difference is more than 1 lakh. Also the difference is more than 50,000. Yes, 1 lakh would be taxable as gift under section 56(2)(10). Another example, actual consideration is 4 lakh. Stamp duty value is coming as 4,44,000. Stamp duty value is 4,44,000. Now, whether here would be a gift, first we'll see 110% se zyada hai stamp duty value or not. Yes, it is more than 110%, so then gift is getting triggered. Why? Because 4 lakh ka 110% is 440. Gift is getting triggered, but the difference is within that 50,000. Gift would not be triggered provided there are no other such situation. Aggregate lena hai aapko pura. If aggregate is crossing 50,000, it would be taxable. Okay. So here, since suppose this is a standalone case, this case is a standalone case. There is no other transaction. These transactions are not there. 4 lakh ka consideration hai, 4,44,000 ka stamp duty value hai. But even if it is crossing more than 110%, but it is not more than 50,000, no gift would be taxable. Student, just like 43CA, this 110% ka limit for the transfer which has happened between 12th November 2020 to 30th June 2021, the limit of 110% would be 120% provided it is from a builder in a first time allotment of a residential unit. Secondly, the date which we discussed, and thirdly, the consideration paid is less than 2 crore. Only then that 120% wala thing would come. Okay, clear hua? Now first let's do one question. Then we'll compare it one thing from the point of view of 43CA and 50C and 56(2)(10). How will income tax come to know about gift? Baba, they will see your statements. Kal ko scrutiny karenge. There are n number of things which would be known. Obviously, people who hide, but otherwise they will get to know. Don't worry about that. But इसमें नहीं आएंगे ना, in the relative के definition में cousins कहीं से आ नहीं रही ना. What can I do then? Sunil, Dubai 44,000 would not be taxable. वो समझ आ गया? Why? Correct, Tanu. Both the things have to be taken care of. That STV should be more than 110% of the actual consideration, and also the difference is more than 50,000. Then whatever the difference is coming, that you have to tax. Correct. Both has to be satisfied. Always, students, gift would, when we are talking about whether movable property or immovable property, when we're talking about whether movable property or immovable property, the difference has to be tax amount, not the fair market value or the stamp duty value. Why? Because Baba's consideration to some amount you have paid. What is the benefit which you have received is that difference. The benefit which you have received is that difference. That's why only the difference part has to be paid. Okay, now let's discuss one question. Okay, well, a question discussed earlier. We're discussing illustration 3. Discuss the taxability or otherwise of the following in the hands of recipient under section 56 to 10 of the income tax. Akhil HUF received 75,000 in cash from niece of Akhil, that is daughters of Akhil's sister. Akhil is Karta of HUF. Akhil HUF has received this amount. First of all, किससे मिला है? Niece of Akhil, that is daughters of Akhil's sister. And Akhil is the Karta of HUF. First of all, for HUF, relatives are only the members. Relatives are only the members. So daughter of Akhil's sister is not a relative of Akhil HUF, first of all. Hence, 50,000 say above amount, the full 75,000 would be taxable. Okay? Nitisha, a member of her father's HUF, transferred a house property to HUF without consideration. The stamp duty value of the house property is 90,000. Anything would be taxable? No. Because for HUF, the member is the relative. Anything received from the relative is not taxable. So nothing would be taxable. Next, Akshat. Akshat received 100 shares of A Limited from his friend as gift on occasion of 25th marriage anniversary. First of all, relative se mila, nahi mila. Marriage pe mila, nahi mila. Taxability gets triggered. Now let's see what. The fair market value on the date on that date was 100 per share. He also received jewelry worth rupees 45,000 from his nephew on the same day. सबसे पहले he received 100 per share, 100 shares, total हो गया 10,000. So one is 10,000. One is यहाँ पे heading क्या होगा? Movable property received without consideration. So उसमें one is 10,000 which he has received as shares. Another is he has received 45,000 का jewelry. Jewelry mila and shares mila, both are movable property for gift purpose, not from relatives hai, not on the occasion of marriage hai. So तीनों conditions I have checked. So 10 plus 45 total 55 आ गए. This entire 55 would be taxable under section 56 to 10. Clear? Individually, if you see, you will say nothing is taxable. Since in aggregate, you have to see it is costing 50,000, the entire amount would be taxable. Next, Kishan HUF gifted car. Kishan HUF gifted car to son of Karta for achieving good marks in 12th board exam. Wow. The fair market value of that car is 5,25,000. First of all, asset dekho. Asset kya? Movable property. Car. Car is not in movable property, so hence nothing would be taxable. Hence nothing would be taxable. Clear? Chalo, great. Now, students, let's discuss one more question. Mr. A, dealer in shares, received the following amount without consideration during the previous year 21-22 from his friend Mr. B. Friend similar, okay? Cash gift of 75,000 on his anniversary, 15th April, entire amount taxable. Bullion, the fair market value of which was 60,000 on his birthday, entire 60,000 taxable, more than 50,000. Okay? A plot of land at Faridabad, bhai, what a good friend. A plot of land at Faridabad, the stamp duty value was 5 lakh on that date. Mr. B had purchased this land in April 2009. Okay, no problem. See, giving gift, Mr. B giving gift is not a taxable transfer for him. That you have to understand. Okay. Now let's understand this. Stamp duty value कितना था? 5 lakh. So this plot of land पूरा का पूरा would again taxable as gift. So 75,000, 60,000, 5 lakh. All of this is taxable as gift. Another thing, Mr. A purchased from his friend Mr. C, who is also a dealer in shares, 1,000 shares of X at 400 each on 19 June. The fair market value was 600. The fair market value was 600 on that date. A sold these shares in the course of business on 23rd June 2021. A को C से मिला shares, who is also a dealer in shares, and जो हमारा Mr. A है वो भी dealer in shares है. Mr. A is also dealer in shares and Mr. C is also dealer in shares. So he have received shares. First of all, whether I'll make a treatment of it or not, the answer is no, because for A, these shares would be stock in trade. For A, these shares would be stock in trade, and stock in trade is not included in 56 to 10. So ignored. Then, okay. Further, on 1st November 2021, Mr. A took possession of property booked by him 2 years back at 20 lakh. The stamp duty value of the property as on 1st November 2021 was 32 lakhs. And on the date of booking, the stamp duty value was 23 lakhs. He had paid 1 lakh by account pay check as on down payment on the date of booking. Students, here also the stamp duty wala concept, whenever we are understanding registration ka date lena hai ya agreement ka date lena hai would depend upon what? Similarly, which we discussed in 50C and 43CA, that if on the date of agreement anything is paid by account pay check, any part of the consideration is paid by account pay check, account pay bank draft, electronic clearing system or any prescribed electronic mode, then you will take date of booking ka SDV. So date of booking ka SDV is 23 lakhs. And the value which he paid for is 20 lakhs. Now the comparison will begin. 20 lakh का 110% is 22 lakh. Trigger हो गया 56 to 10 because the consideration SDV is 23 lakh and the consideration is 20 lakhs. Also the difference is more than 50,000, so full 3 lakhs here would be taxed as gift under 56 to 10. We will not take 32 lakh, that is understood? Correct. We'll take 23 lakh. Now, how is the difference? Difference will only be taxable, but to see, you have to see 110% and the actual consideration or SDV ka difference. Clear? Acha, from here, one more concept arises that आपने 56 to 10 में while doing 56 to 10, please listen carefully. When I am paying the tax on the consideration plus the difference, consideration to मैंने pay करा, plus I am paying the tax on difference also. Or if this is a normal case, I am paying tax on the entire amount when no consideration is paid. Okay, I am paying tax on it. How I am paying tax? I am offering it to the income tax. Correct. So the moment I am paying tax at fair market value or the stamp duty value, whichever is the case is for the property, I can claim that as my cost of acquisition under section 49(4). Under section 49(4). See, gift which I have received from my relative is not a taxable transfer for relative. Listen carefully and try to relate concept now. Gift which I have received from my relative is not a taxable transfer for relative. Also, it is not a taxable receipt for me. Correct? Now, when I will sell that asset, suppose I have received property from my father. And when I will sell that property, I will take cost of the previous owner and period of holding of the previous owner. That we have understood. Now, I have received a plot from my friend. Just like Mr. A received the plot in this question from Mr. B. Mr. B के लिए it is not a taxable transfer. Why? Because that is anything given as gift is not a taxable transfer. For me, it is a taxable receipt because the stamp duty value exceeds 50,000. That means on entire amount I have offered the tax. I have offered the tax. Now I am rightfully allowed to claim that cost of acquisition, which is the stamp duty value on which tax is paid, as my actual cost of acquisition for when I will sell that land. For when I will sell that land. So in this question, Mr. A can rightfully claim this 5 lakhs now as a cost of acquisition. Why? Because on this 5 lakhs, he has paid the tax. So he has paid the tax. So as per section 49(4), the cost of acquisition on which income has been offered under section 56(2)(10), or the asset on which the income has been offered under section 56(2)(10), the stamp duty value of that can be claimed as the cost of acquisition. So now what has happened? जो Mr. A को Mr. B से land मिला था, the land which Mr. A received from Mr. B, he sold that for 7 lakhs. So 7 lakhs के लिए now he has sold it. जिसपे 5 lakhs which he offered as tax is what he's claiming as cost of acquisition. And here the period of holding will begin from the time when you have received it, and short-term capital gain would be 2 lakh. Short-term capital gain would be 2 lakh. Here the period of previous owner would not be considered. Clearly देखो, 2 types of gift में difference confuse मत होना. One is land which I received from my father. उसमें no one is getting tax, neither the recipient nor the person who has transferred it. So period of holding is considered from the period when the father was holding it. And cost of acquisition was the cost to the previous owner when I will transfer that land. But when I am receiving some land as a gift from my friend, so friend के हाथ में nothing is taxable, number one. In my hand, the SDV would be taxed if crossing 50,000, and also when I will be selling that asset, on what amount I have paid tax, I can claim the cost of acquisition. I can claim that as cost of acquisition, and period of holding will begin from the date when I have received the property. बोलो क्लियर हुआ? दोनों का डिफरेंस क्लियर हुआ? Indipal, I think that's very rude of you to say, because I also have to go somewhere. But please, I request you to focus. I am also putting extra time to cover the syllabus. Jay totally understood your point of that 12th wala student. Individual receiving shares of listed company after death of the father, can this be considered as gift? No. Anything received under will or inheritance would not be considered as gift. Clear हो गया? Ramakrishnan, that is the point कि stamp duty value पे अगर आपने amount, see simple सा concept है. If I've paid tax on it, I've offered it to tax by paying, considering as gift. Now I'm rightfully allowed to take deduction on it as cost of acquisition. That's it. Okay. Then one more point, when you are taking it, please carefully hear this, listen. For Mr. B, and for Mr. A, in the same question, Mr. B, if transferring any land or building or both to Mr. A for inadequate consideration, he is the recipient, he is the person transferor. Now for him, what provision we'll say? We'll see 43CA or 50C. For the transferor, we'll see 43CA or 50C. Why? Because either he would be into the business as a builder and he's giving land or property, or either that would be a capital asset for him and then he's transferring it. Anything transferred for inadequate consideration, you will see 43CA or 50C and 43CA to make to see what is the full value of consideration. What is the full value of consideration Mr. B has been transferring to Mr. A. You will see whether 43C is applicable or whether 50C is applicable, and that would depend upon the nature of the business. If he's a builder, then 43CA. If he's not a builder, then 50C. And for the recipient, 56 to 10 would come into picture, where the difference between the stamp duty value and aggregate and the consideration which has to be seen, 110% or 50,000 both have to, and 50,000 both have to be seen, and then you have to tax accordingly. Okay, here the concept is there to see what is the full value of consideration for 50C or what is the full value of consideration for 43CA on which business income would be taken up. Okay, next now we move forward to deductions. Income to kya tax hoga, that we understood, but what kind of deductions which we will be receiving from the income tax under other sources is what we have to see. Chota sa part hai, just 5 minutes more, 10 minutes more, 5-10 minutes more, and then we are concluding this whole class. So deductions which are allowed under section 57, first is dividend. Whenever you're offering dividend or interest on securities को realize करने के लिए, if you're giving anyone a commission or a remuneration to banker कि okay now realize this amount, that would be allowed as deduction. Dividend के case में भी same thing. Suppose to invest in any company shares, listen carefully, to invest in any company's share, I have taken a loan. To invest in any company shares, I have taken a loan to invest in the shares of some other company. So suppose I took a loan of 5 lakhs to invest in the shares of X Limited, and I took shares for 5 lakhs rupees. Now, if 5 lakhs rupees pay, I have received dividend of 60,000 during the year. Dividend of 60,000 during the year. This is the dividend amount which I have received. And 5 lakh pay, since I took a loan, I am giving an interest of 10% per year, which is 50,000. 5 lakh pay interest I am paying is 50,000. And dividend which I have received by investing this 5 lakh is 60,000. Okay. Now, can I claim this interest amount as deduction? The answer is yes, but maximum up to 20% of the dividend amount. Maximum up to 20% of the dividend amount. That is maximum I can claim deduction here is 12,000 of the interest amount. So interest expenditure which is there to earn that dividend income, which is basically to invest in that share, shall be allowed up to maximum 20%. This you can ignore, superannuation fund wala, this you all know. If I am into a business of, if I am treating income from other sources in the form of rental income from plant, machinery, furniture or building, then I can claim as deduction as rent, rates, repairs, insurance, depreciation. All of that I can claim as expenditure. Okay. Next is family pension. Whenever family pension is getting taxed, this is important. Chota sa 1 mark theory question or a MCQ question can come. Family pension kya hota hai? Pension if received by the person, that is taxed in their salary account, right? But if suppose the person who was the employee has deceased, now the family will get the pension. They can, for them, that would be an income from other sources. Why? Because they are not the employer-employee, correct? They are not the employer-employee. Their income would go under income from other sources. From this, they can claim deduction either 1/3 of that family pension or 15,000, whichever is lower. So 15,000 or 1/3, whichever is lower, that would be allowed as deduction. कोई भी income है, any other income which we are talking about, any other income which is taxed under income from other sources, and उसके लिए if you have made any revenue expenditure, that would be allowed. उसके लिए if you have made any revenue expenditure, that would be allowed. Secondly, thirdly, interest on compensation or enhanced compensation on compulsory acquisition. Interest part is taxable under income from other sources. Remember, उसपे 50% is the deduction amount. 50% is the deduction amount. So if interest received during the year is 1 lakh, only 50,000 would be taxable. Only 50,000 would be taxable. Next is income from activity of owning and maintaining racehorses. I told you, owning and maintaining racehorses, say any income is coming is income from other sources. But if you are maintaining any racehorses, because maintaining a racehorse is not an easy task, you need to have proper setup from him, you need to maintain proper staple from him, you need to have proper care of him, because these are premium horses, right? So on that, whatever expenditure you are making, you can claim it as deduction. You can claim it as deduction. What all expenditures are not allowed? The expenditures which are there in the personal natures would not be allowed. The expenditure which are there in the personal nature would not be allowed. The expenditure on which TDS was deductible, especially when it is in the nature of interest payable outside India or salary payable outside India, and TDS was deductible, you did not deduct it, or after deducted you did not pay it, then that would not be allowed. If we're talking about any expenditure of revenue nature which is allowed, but on that you had to deduct TDS. You had to deduct TDS and you did not deduct TDS, and that amount is payable to a resident person. So then 30% of that expenditure would be disallowed. Similar to what you did in 40A IA and 40A I. 40A ka nature would also be applicable. That means if you're claiming any expenditure, and you have paid for that expenditure for a value of rupees 10 or say more than 10,000 in cash, 48.3, 10,000 in cash was disallowance. Similarly, here also, if you have paid for an expenditure for more than 10,000 in cash, that would be disallowed. That would not be allowed as expenditure from your other sources income. Expenditure in connection with winning from lotteries, crossword puzzles, gambling, etc. is not allowed. You will not say कि KBC में जाना था, तो I bought a good shirt and I purchased books to study for the KBC quiz. No. Nothing as an expenditure would be allowed. This brings me to one very important thing, that the casual income, these are called casual income. These casual income are taxed at a flat rate of 30%. These casual income are taxed at a flat rate of 30%. Only these income. These income would be taxed at a flat rate of 30%. No expenditure deduction would be given. No deduction under Chapter 6A ka benefit would be given. Flat 30% pay you will tax it. Clear? Flat 30% pay you will tax it. This is a special rate mentioned. This is special rate है for long-term capital gain 112 and 112A में, short-term capital gain में 11A में. This का special rate is mentioned under section 115BB. So flat 30%. No deduction, no adjustment for an exhausted basic exemption limit, no deduction of expenditure, no deduction of Chapter 6A. Clear? So with this, I believe we have finished our other sources wala part. I hope if there's any question, I would be happy to take. Likewise, Parth, Rohan, thank you so much. 115 BAC student is a special tax rate wala section. I think that would be covered, or that must have been covered by now. That is a special tax rate ka section, in the sense special slab rates are there, but to claim that you need to forego a lot of benefits. Same, Siddharth, absolutely same. Thank you so much. I appreciate your comments. Thank you. If Abhishek says if the plot of land is not sold, even then it would be taxable. Yeah, see, Abhishek, the taxability is getting triggered because you are a recipient of that plot of land. I'm so sorry. I'm so sorry. Yeah. So, Abhishek, I was answering your question. When we're talking about recipient, since you are the recipient, you have to pay tax on what you're receiving as a plot of land. Once you have received that gift now and you have paid tax on it, now when you sell it after 1 year, 2 years, 3 years, 4 years, whenever you sell it, you're eligible to claim cost of acquisition. Or if you're not selling it, that is also fine. But whenever you will be selling it, you can claim it as cost of acquisition. Achha, cost of acquisition for a land for the stamp duty value which is less than 50,000, then you have not paid any tax, Rohan, on that. Nothing would be taken as cost of acquisition. Thank you so much. I wish you all a very all the best. Do not worry. I know as a first time, if you're doing it, it is a lot. Step by step, one by one, you will get a hold of it. We even till date, after so many years, still find recollecting certain provisions a task. So do not worry. This is just first baby step towards it. You will be able to do it. Only thing is, do not just income tax itself is a very interesting thing because everything is going around you in real life. So you can relate it. The more you will relate it, the more you will understand it. Also for the sections, try maintaining a 10-pager section chart where you can quickly revise it. Also, the module itself has some very good recapitulate questions where in just 10 minutes you can revise the whole chapter. So take module as a Bible, solve all the questions, solve RTPs, solve MTPs. Maximum question you will solve, maximum answer you will get. Okay? So all the very best. Until next time, see you. Thank you. So done. Yes.